All right, so we're talking about the safe way to make $3,000 or more shorting this very bullish market. Now, yesterday, when we got into the early morning sort of pre-market analysis, I had spoken of two things. I spoke of a retracement is likely coming for just how bullish we've been, and that the nearby high is probably going to be taken out. So you can see we are parabolically moving up. A retracement is soon going to be coming. It's on the horizon. We just don't know when. I also spoke of this high right here at 567 being taken out. Now yesterday we almost got both. Now I only took the short, I didn't take the long because I was already done for the day, but let's get into that trade. So if we look here back on the hour, one thing that I began noticing was the VWAP was starting to apply pressure onto the 14, where it had been doing that every morning, but you could see far more of a curl starting to take place. And where you really can see that, if I jump over here to the 1 minute, this is yesterday's pre-market, you can see the sellers starting to attempt this push down in the overnight session. All right, not massively strong, but it has not really looked like this with this type of consistency for a little bit now. And I was feeling pretty excited. You know, as I was going to the morning, I was obviously saying, well, you know, you got to be bullish unless you start to see evidence for a retracement. And at that point, then you can start looking for, you know, a short amount of shorts. Well, as the market opened, we jump right down below the EMAs. Now we don't have anything really below us. So if it can start to fail, especially the overnights, the pre-market and the overnights, you know, there's a real opportunity here to start seeing some good downside. So it looks like, you know, right around what, 342 was going to be our overnight, and then somewhere right, if you use a 7 o'clock as your pre-market low, then yeah, you know, you're probably looking either at here 364 or 380. And you look how we open up in the morning, getting that nice separation under the VWAP, EMAs beautifully separated. Bull is just unable to push this thing back up. Sellers are applying a lot of pressure. Now, the first 5-minute candle or the 5-minute low is already sitting around 367. So initially, if you're looking at the 5-minute opening range break, you can try to take that out. Now, I wanted to be careful of both an overnight low sweep and a 5-minute low sweep. Oftentimes, it's going to sweep a low or sweep a high and then immediately go into the opposite direction, right? Picks up that liquidity and takes off. So I want to be a little careful around the 5 for how bullish we've been. But you can see here, bulls are not able to really push it past the EMAs. And when you're in a strong trend, EMAs can really become a good guide, a good friend to you for a point of rejection or support, resistance or support. Now, what I wanted to see was I wanted to see sort of a break under maybe 356, 357. It did pop back up here. It had a nice rejection candle here off both EMAs, started to come back down. So I think I began looking potentially to jump in a little bit early. Now I talked about, right, being proactive versus reactive just yesterday. So in this sense, once again, I was trying to be a little bit in between. I'm reactive in the sense that I can see bears are pushing this down in a bullish market. I'm thinking a retracement can be very likely and very swift. Just don't know how far down it will go. But if I can get in right before the takeoff, then we can have a nice profitable morning very, very easily. Now I got in, and initially, I think I got in right around 62 maybe, I believe somewhere on this candle. And what I wanted to see was I just wanted to see a flush down. And I think I held about 25 points of a mental stop. I didn't place it in yet. It was very volatile. It was wicking a little bit. So I had kind of readied my stop, 72.82, yeah, right before 90. It started to go against me. Now at this point here, I'm readying to put my stop in. And immediately above 90, it just shoots right up. So I'm already like, this is terrible. I'm 40 points down. Let's get out of this trade. But it just stops right on the nose. And so I said, okay, I don't like this. I do not ever want to be 40 points down when I'm trading one full contract size. Even though I'm on the MNQ, I was trading 10, which is the equivalent of 1. I saw it wick, come down. All I wanted to see was I just wanted to see how it reacted. Was it going to come down and go right back up? I had my stop right here at 399 at this point, which is very high. But I could see the volatility was going to probably bring me down. Now at this point here, once I saw a rejection, I thought, okay, it's one of those rare times that I'm going to allow myself to dollar cost average. I don't promote this, especially at full contract size. And at one additional sell up here, I really just needed to get back to the EMA. And I was ready to get out for a short loss. I was going to minimize this massive 40-point move, probably gain maybe 10, 20 points back, and still get maybe a $400 loss. I was expecting that. And I was okay with it because I thought, okay, we're going to do an overnight sweep, and then maybe we're just going to turn around these EMAs and start heading for the top and start taking out this high up here. Well, it flushed before I could even blink, and it flushed right down, right back into my 63, and it came down. And at this point, being that I was already 40 points up, or 40 points down, I dollar costed average in, and now from around 98, 97, I'm sitting below the 50s. I thought, hey, I just got a 50-point move. My initial entry is back in the money. I don't want to be greedy. It went against me already. Let's just pop out. And when I popped out, I was able to secure 1692 per account. So here, 3.39 thousand for the day, 2 trades. That was my initial entry, and then a dollar cost average in. So again, this was shorting the market in a very bullish time. And the reason why I could get away with that was you could begin to see, let me stay over here on the hour. You can really begin to see that sellers are trying to do something, right? They did lose. They lost the battle yesterday. Bulls took them back out. But you can see here, we're breaking down through the 14 EMA, which we've really yet to do. We've wicked through it, but we've never broken through it like this, not with that kind of momentum. And then once again, we nearly ticked out that high, but sellers, right as I said, right, there would probably be a reaction at that 562, 565 level. And the bears did pull that right back down to 356. But once again, bulls are still yanking it back. So bulls are still in control, but there was one moment where it was really obvious that you could see bears had this. And now I got out here. I think, actually, I'm not going to say I got out at the bottom. I think I got out right around, I had one sell, I think, right around 50, 51, and one sell probably around 56. Once this candle started moving back up, I wanted to get out before I was going to go red again. It did move back up. Once again, you have another rejection. You have a long wick, a small red candle, kind of a doji candle. You have another long wick down. They attempt to get another long wick down, and yet all this time, it's just moving downward. The EMAs are separating, and here you can just see that dip. If you had taken the better trade, which I was hoping was going to be here, the better trade was right here, right? You flush through all these wicks here. You can sell right here at the bottom of this candle at 53. I would probably say, at this point, I would say 63 is the base. You go a little bit above it, maybe 70. So what are we looking at here? 53 to 70. That's only about 18 points. Full-size contract, not too bad. And then I would realistically just say, well, you target 00, and there it is, another 50 points. Just like that. If you had a runner, you were going to get another 25 out of that. If you were going to wait for maybe a higher low to get in, Let's see, it pulled back, it came down, it pulled up, and it went away. You got out at 14. That's still a great trade. I mean, I was hoping it was going to happen here. I was hoping it was going to happen here. We had one pullback, it came down, we pulled back again, and then it finally went. So again, this is where even being reactive along the lines of trying to be a touch ahead of schedule, it doesn't matter. It took three shots to get this thing to really fall, and it finally did. Now, ideally, bears could have taken this thing over and it would have knifed all day, but bulls still have this thing in control. They started bringing it back up, right? They come back in to the range of the day, and it just takes off. And as I said, it would not be surprising if on yesterday we took out this high. We were so close, 562.75, looks like 565.50. The reaction happened there. We had, it looks like a good amount of sellers sitting up there. They did push it down nearly to the VWAP, push it down again to the VWAP. You can see a lower high starting to set in. At this point, I would say at least for the day, bears sort of had it under control until that end of day when they pushed it back up about halfway. And now into the overnight, well, looks like we're holding a little steady. Bulls are starting to push this thing up again. I have no doubt, I don't want to say I have no doubt, but good chance, right, that this high gets taken out. Unfortunately, I don't think I'll be able to trade today. I have a partial day at work and I have a lot to finish. So I'm very fortunate that in 4 days, with one of those days only being $100, I get to finish out the week above 5,000. So that feels good for having a non-trading day or a 4-day trade week. I'd like to come in next week and get back into my usual $2,000 to $3,000 weeks. I'm very, very happy with, preferably somewhere in between here. Maybe 3, 4, but hey, I'll never deny a $5,000 week. I could have traded better yesterday. I could have been a little bit smarter. I probably should have had my stop loss a little bit tighter, especially in this hindsight. It went down, but there was a lot of volatility here, a lot of barcoding happening. And so realistically, I probably should have waited for a break below 56 and then said, okay, well, I'll just keep it right here to the base at, around 70. I would have been stopped out if I did that. I would have been in on this candle here. Although due to the length of that candle, maybe I would have waited for this candle to close, waited for a pop, and then waited for a break here, actually more close to, a little closer to 50. And that wouldn't have happened till over here. So what I could have done differently is allowed this barcoding to break. And then once it broke, retest it, and make sure that it can't get too far above. Like this candle here, had this been a green candle and then this one a rejection, that would have been the sweet trade. So who knows? I should have been stopped out earlier on this one. I would have definitely been stopped out here if I had gone in on this flush. But the best trade was probably waiting for all this barcoding to be done. And then once it breaks, even if you wait for the absolute bottom break, 344, it flushes through that, you get that rise, you get that wick up top, you get the rejection, you come in at 325, you're still making a nice 25-point run. And that's still one contract, that's a $500 day. If you're running multiple accounts, that's 500 times however many accounts you're trading. If it's a cash account, that's still 500. If it's 2 contracts, that's 1,000. Like, these are all really great days and really great trades, and that would have been probably safer and more reactive versus proactive. So that would be my recap for the day. I don't know what's going to happen today yet. I haven't really done a lot of analysis because I probably won't be trading. But to take a quick look, all right, if we want to be reactive, let's jump over to the 15 here and see what we got. Well, we know that we have high of day, good chance of that getting swiped today. So I would like to see a reaction at the high of day yesterday, see if it can take out this high. If it does, there is another, well, I think all-time highs are around the corner here. Looks like all-time highs 865. So back to the 15, 865. Could. I don't think we're going to get there today. But we could easily swipe this if we have found support here at the high of day. Yeah, we don't really have much until at least around 700 that I can see. Right now we're in value area, we're inside of range. I'd be very patient inside this box here as you're starting to see sellers stir up some trouble. You're starting to see sellers start to fight back and say, you know what, I'm sick of this parabolic high. We need a better price. I mean, think about who wants to be a new long right now, right? And the longs, they're going to start taking profit. Once they start seeing more volatility like this and more selling pressure, you're going to have a lack of new longs. You're going to have old longs beginning to take profit. You're going to have a lot of interested new shorts. So the only people who are stuck are old shorts. They're the only ones that are going to allow this to keep squeezing higher. And that's probably my take on how this thing keeps going parabolic. Is it's partly the economics and the market itself, but on a small time frame, it's probably shorts that are getting squeezed out. So if we can break down below the low of day from yesterday, or at the very least below the afternoon low, right, below this value area low, we reject, we flush through here, then come back, retest, reject. I think we could retest low of day. And then this box down here is the value area high from 2 days ago. And I thought, you know, this could be a wise idea, is start going back and putting in the value area highs of each previous day as we start to retrace when it does happen. And it'll give you an idea of you know, okay, try to find maybe the point of control or the top or the bottom. If you can't see a good line like here, right, we had some overnight consolidation. These are all good points where if we start to retrace, you know, we're going to make our way back to the previous week value area high, which is an incredible mean reversion there. So be patient. Be patient today. Wait for, I would say, breakout retests. It could still grind up. It could start to reject. Don't get in too early. Don't get too excited if you start to see selling pressure. Make sure that this doesn't happen to you, right? I mean, you have shorts that are probably stuck down here. I'm sure you have shorts that are stuck down here. And if they're still holding, they're getting squeezed and the pressure's on them. If they hold into open, there's a good chance that if we're up here, they're going to start moving out of their shorts and this thing is going to continue to just squeeze higher. So reactive, patient, remember that we're still bullish. Look for a true break of structure, retest if you're going to short. And if you're going to look for the break of highs, I would start being a little bit careful. I don't know how many more long pops we can have at this height. We're getting, the air's getting thin up here, if you know what I'm saying. So good luck to you. I hope you end the week strong, end the week green. Don't overdo it. It's Friday. Give yourself a good weekend. I will see you next week.